100%.
Awesome. Well, welcome to a Cardinal House AMA. We are here with Hybrid Finance today. It's the 12th of October, 2022. I'm excited to get into a little bit of everything you guys got going on, and yeah, we start things off just a little bit differently. We're going with some questions that we had already asked beforehand. So if you guys are in the audience, go ahead, take a look at the AMA polls. Just threw a couple questions. I didn't want to make it too long. Generally, it's a little bit longer, but I wanted to give us time to dive into everything you guys got. So first question, just to try and break the ice a little bit, do you guys prefer sweet or sour foods?
Oh,
Oh,
man, I thought okay. This is
I'll go
trickier than I
sweet.
was expecting. Oh, well done, Mac. Right. For
Awesome,
diversity, I'll go sour.
awesome. Yeah, I think most people, I think like double like sweet over sour. I gotta say, if I get some like sour gummy worms though, there's no limit. I just keep eating them.
Oh, those are pretty awesome. Or like
Definitely.
what is that? Like the sour kind of fruit roll up kind of looking thing. I used to have those all the time.
Like
Um,
the
but I don't know. Like usually in the movie theaters, right? But here in I'm in South Korea now, and
okay.
they don't have a lot of sour things here. Um,
There's a lot of spicy stuff.
so spicy and sweet and stuff like that. But I don't know. I just don't see the cool sour stuff. They do have like nowadays the sour gummy worms, which people are
Mhm.
going crazy over, but that's like nowadays. Been here for a while.
Gotcha. How long have you been there for?
Just over like 13 years.
Oh
So
shoot. Okay, gotcha. So this is not a
yeah.
recent thing. Got it. All right, that's wild.
No.
Bet there's a
Yeah.
lot.
There's
There's a lot.
definitely. Yeah.
Sorry, go ahead.
Oh no. Go ahead. Go ahead.
I was just gonna say, I bet there's a lot of experiences that you have under your belt that most people don't. So it's really cool.
Oh yeah.
Uh,
I mean, yeah. I'm sure there's a bunch of people. I'm actually I'm a little bit special. I'm originally from Brazil, moved to the
really?
U.S., and then now I'm in South Korea.
So how many languages are you
It,
at?
uh, fluently, well, not well, fluently too, but
Okay.
Korean, I can hold a conversation in Korean, I guess. Um,
Okay.
so almost three.
Gotcha. All right. Next up, we got Polygon or Ethereum for a 5-year hold. If you were to hold one for 5 years, which one would it be?
Oh,
Ooh, Polygon.
oh man, I was gonna say Ethereum, but I don't know. Yeah,
Come on,
Perfect.
man,
I'll,
you
I'll
gotta
go.
pick. You got.
I'll go ETH. I'll go ETH.
Fair enough. I think both of them have a lot of potential. So I think 5 years is doable for either one of them. Do you guys prefer Shark Tank or Dragon's Den?
Dragon's Den for me, 100%.
Really? Okay.
I don't. Wait, are those? Oh man, I'm gonna mess things up now. What are those?
Uh, uh, if you don't know what either one of them
Wait,
are, it might be a little
well,
bit tough to answer.
Shark Tank wasn't that like the TV show?
Yes.
Yeah, they're both TV. It's the you entrepreneurs pitch to investors.
I
They are
shouldn't
the
answer
idea.
that. I've been in Korea. I think pretty much. I think Shark Tank was coming out when I moved here, and yeah, I barely watch. I watch like Netflix and a couple other things, but like no like kind of normal TV shows, I guess, anymore. So yeah,
Gotcha.
I don't
Fair
know.
enough. Solo, what separates them for you? I know you went real quick into saying Dragon's Den.
Oh, sorry, my I missed that part. I was like sitting here. Like, the silence feels like I've been asked something that I didn't hear.
Oh,
But
no, you're
yeah,
good.
I grew up on Dragon's Den, so that's the one I would have known as like and everything. So I've never really watched Shark Tank, to be honest, but I've seen little clips and stuff. But Dragon's Den, I've watched a whole lot of that.
Gotcha.
Just being from Ireland, it's just the one that we have, more so.
Mm-hmm. Gotcha. Do you guys eat mac and cheese with a fork or a spoon? This is a super controversial one.
I would say a fork.
Okay. Yeah, I agree.
This is
Yeah.
like a nostalgia trip here.
This is the
Mac
trap.
and cheese.
Yeah.
Oh, and you guys gonna know like how old I am too. It's just like, how old is this guy?
Yeah. He's like, you've got a lot of experiences under your belt. It's like, he's calling you old.
No. I'm calling him living in another country across the world for 13 years.
Oh yeah,
It's just
yeah,
like,
no, I'm with you, man.
mac and cheese. I haven't had that in like 20 years. Well, when I used to make mac and cheese, I would put a crap ton of cheese into it. So I'd probably go with fork in the beginning and then the spoon to dig
Oh
out all the cheese.
no.
That I could get.
You and your middle ground answers.
And then
Yeah.
last bit, what's the biggest lesson you guys have learned in the past year?
God.
Take profits.
Ooh, I like that.
It's a very good one.
That's a good one. Yeah. Oh man.
Crypto taught me that very quickly.
Yeah.
How about for you?
Yeah. I'm gonna go down. I'm gonna stick with your kind of route of. I guess I really learned about what I thought I was willing to lose and what I was actually willing to lose.
Gotcha.
Two different things, you know. Like I'm like at the time I'm like, yeah, it's fine. Like if that goes down the drain, it's fine. It's sensible. It's fine. And then yeah, when it actually goes, you're like, oh man, I never thought that would go. I can't cope without that money. It's like I see what they mean now about that. So
Only
definitely a
risk what you're
lesson.
willing to lose. Yeah, definitely. Although this year it's hard not to lose money if you don't just hold cash in the past, 6 months. Whatever it's in, it's very difficult not to have it at least going down. All right, well, perfect.
Very true.
Yeah, we like to do these little bits just to get to know you guys a little bit better. Some on a deeper level, some just breaking the ice and hanging out for a little bit. But now that we did that, why don't you give us a quick intro on who each of you guys are, what you guys are, and what roles on the team you guys play?
Sure. Yeah. So that's one I was kind of thinking. All the EMA questions we had recently, that's not one I've answered for a while. So, yeah, I'm Sir Drake Solo. Obviously, I've been God, that's a stuttery start. Thinking like this guy's got no idea what he just started on the team yesterday. No, I actually founded Hybrid. You probably wouldn't believe that from the start, but with Macrai, and I've done a little bit of. So we all do a little bit of everything on the project. Particularly, I focus on the tokenomics and the design of, and we'll get into obviously what all that is. But a lot of that is what I do specifically. So how everything functions, and I work very closely then with our developer to get the plans that we draw out, and how he actually implements them and how they actually function when it comes to the smart contract side. I don't code them, but if you can think of it as everything up to the point of then coding it. I got started in crypto about 2 years ago. Just doing the kind of classic trend I think that a lot of people who are here now did is, you go into like stocks and shares, maybe you go into options, and then you go into blue chip crypto, and then you go into DeFi, and here we are. Worked on different projects back in what I refer to now as the good old days. So back when everything was working and everyone was making a lot of money, really. And varying different projects with varying degrees of success. Mostly, exclusively actually as team members. So I never. Hybrid is the first project that I've founded or built myself. One of them, actually, the very first one I worked on, is some of the mechanics are quite similar to what we use, and we've kind of adapted them for our purpose and built a little add-ons and tweaked them a little bit. But that's where part of this concept has actually come from. So as a governance developer was kind of the main thing I did to begin with. Time Wonderland was one of the first projects that I got into back at the start, and I worked with a few different projects to make kind of similar governance systems. So how can we get good community consensus without favoring different groups, or in the sense of maybe wallet capacity, or not capacities but values. How can we take that out of it? How can we also take out people making too many Discord accounts and all these sorts of things? So making a secure and also efficient governance system was mostly what I did, and then I progressed up and up through the ranks in different projects as I went. Eventually then got kind of fed up of sometimes kind of crappy teams and stuff, and just myself, McRoy, and a few of other guys from another team, we said, well, at this stage, why don't we just do it ourselves? Like the expertise that we're lacking is there's not really anything there anymore. We've all kind of, someone's had a little bit of something. And so, yeah, we decided, look, I think we can fix this and this problem, and this is what we'll go after. And we opened Hybrid.
Yeah, that's awesome. So what was I guess, Macro, why don't you, I hope I pronounced that correctly, why don't you go through your side first, and then I'll start diving a little bit deeper into hybrid finance.
Oh yeah, Solo pretty much covered. We kind of do a little bit of everything. Nowadays, I have been kind of pivoting towards managing the treasury, but we kind of all pitch into that as well. But just making sure all the transactions are done and things like that. But I try to, I've tried to help with development, jump in on Discord here and there. But yeah, job wise, I kind of do a little bit of everything. History wise, I've been in crypto just under a year, I guess. I kind of came in kind of late. I heard a lot about crypto, but was just doing normal investments for a long time. And then right in November, decided to jump in right at the height so that I could just, feel the full brunt of the bear market. Just it's a really good start. But yeah,
Good
so
lesson.
learned a lot. Um, and but yeah, so for the most part, loved working with Solo and our original team, and now we have a new member, a couple changes, but still really enjoy being part of crypto and just trying to learn as much as possible to kind of catch up to everyone. I always feel like everyone knows more than I do. Like I learned something new, and with crypto, you just have new things coming up all the time. So, but definitely a lot more interesting than normal TradeFi kind of stuff. So
Yeah, for sure.
here for the long run.
Good. That's what we want to hear at the bottom of a market. So Solo, or I guess either one of you guys could answer. What is the one problem that you guys saw that, hybrid finance is, with that 10,000 foot overview, that one problem that you guys saw that you're trying to solve with
Okay,
hybrid
yeah,
finance?
Yeah, definitely. I can take this. So it's almost twofold, but we can kind of, overall it's one, but we'll almost look at it as two things. One of them is, for retail investors in general, and we're almost fixing a TradFi problem as much as a kind of Web3 problem, but there's still investment opportunities that are either inaccessible or just tricky to manage, and therefore they're not a good choice, but not financially, maybe because they take too much time to manage, or they're a little bit more on the complex side. And so there's still there's a huge scope to providing that to investors. So like one place is instead of doing this yourself, you can put your money where, like you would just with a bank, right? A lot of people tend to do these sorts of things. Is you're putting money somewhere and you're saying, look, I trust you guys to go and make more of it with my money. So there's scope to develop that in crypto, and there's a huge amount of scope to do it better than it's currently being done. But we also want to kind of leverage the new tools to offer something much better, really. So there's lots of revenue share models out there, and this is really what we're revamping, is the revenue share. How can investors get access to well managed and otherwise inaccessible investment vehicles, but let's do it without any or limited risk. So that's really what we're going after, is the category of investment that is safe, predictable, and a word that we really try and use is quantifiable. So you can quantify your potential rewards and returns and your potential risks very easily. It's not like kind of a magical thing that's like a lot of kind of projects can be these days, where you're like trying to figure out all of the scenarios, and there's just thousands of them, because all it takes is some random person in a Discord to crash the price or something. We're actually just speaking to some guys the last day about doing an AMA with them, and we had to ask them, like, we've seen all these Twitter things about you guys rugging a different project. Like, I'm sorry, but you need to explain this to us, and then they explain it, and it's like, and we can check it and it's all fine. But these sort of events can have huge impacts on otherwise sound products, and so we need to take the guesswork out of quality investments. If we're making a quality investment product, we have to take the guesswork out of it.
Mm-hmm. Gotcha. Yeah, I think those are definitely two problems that I could see solutions for being very valuable. What is the route that you guys are choosing to address both of those? Like, starting with the first one on the investor side of thing, right? The taking out the it's tough right now, I guess, because the markets are very, very low, very down. But what's the approach that you guys are taking to that first problem you addressed?
In terms of, okay, so yeah, investment wise, we like just where we are financially is quite a good place, and we can talk about how exactly that is. But equally, we're not like rolling around in cash, so it's got to be quite aggressive what we do, but it definitely can't have a very high element of risk. And we can tell that from the market. The market's not at a brilliant place. While we are very low, we still have CPI numbers out tomorrow could easily spell more bad news. So I think going and buying a load of Avalanche would probably be quite a bad choice.
Mhm.
So we need to look at, well, how can we make money? It's not like there's not money to be made. There's always money to be made, and just as much so, as long as the market is in existence, there's plenty of money to be made. So, like, trading bots, and we'll get into these, like, we can get into them very specifically, because I don't want to just kind of toss that around, because it's like the key phrase to toss around now these days. So we can talk specifically. We actually use like a martingale system, which is quite a low risk trading bot system. It's just like multiple small returns, and yeah, with a relatively low risk profile compared to a lot of trading bots. So but equally they do like maybe let's say like 8 to 10% a month, relatively conservatively, and that's great for us with the area that we're at. And then we use like a much higher volume, much lower risk investment to just offset any potential drawdowns that a trading bot could have. So like the current one is, we have Grizzly Finance, is just brilliant. That's not inaccessible at all, and it's not even hard to manage. But the trading bot side is harder to manage. Not all of the time, but definitely can be, and particularly knowing what you're looking for is trickier. And we can look into these things really well and do all the due diligence and all the effort there for you. And as we expand, we'll be looking at more, strategies that we can manage, be it manually creating market neutral strategies, or whether it's folding collateral. All of these sorts of things can be done with our treasury. But at the moment, trading bots work very well. Grizzly Finance, we have USDC, USDT there, $50,000 of that getting 60% annually in the Grizzly token, which performance is what I would describe as meh, but it is perfect for what we need it, which is almost a bit of a hedge to just the risk aspect of the trading bots. So that's kind of what we're doing specifically at the moment. Definitely there's an intention to open up and deploy more into seed investments, and we have the capacity to do so, in the sense that we speak to Lava Financial about deal flow. We will also be speaking to some VCs as well about deal flow there. But it doesn't feel like the right time yet because of the risk to reward ratio there. That's something that we're not doing now. But for those of you who've been around the project, it's definitely something we talk about a lot and we're very interested in. it just, again, the risk to reward doesn't feel right at the moment.
Yeah, for sure. And so with that, the fact that your guys' I'd say main source of that return is through trading bots. What is the mechanism the trading bot operates? Is it a manual, some kind of manual function within it? Is that what you're talking about, reducing that barrier to entry? Because obviously, as we've seen, trading bots, just like anything, right? It implements a strategy that as people start to figure out, they will start to attempt to create another trading bot that beats that new strategy, right? So it's an ever growing field, just like anything. They build upon a strategy and find a way to kind of play off of and beat bots continuing to use that outdated strategy. So what is the way that you guys are mitigating some of that risk? Is it manual? Is it something that's ever changing? Um, yeah, what's the thought behind
Uh,
all that?
Yeah, so not particularly. We've kind of bounced around a little bit with bots in the past few months, and
Mhm.
really just kind of, yeah, we wanted to, we're like, right, let's, these, have a lot of potential, trading bots, 100%, because of, they make a lot of sense, but they're also not the promised land that I think a lot of people are saying that they are currently. And you've got some, providers that are becoming more and more popular, and it's very easy to look at these spreadsheets and see incredible numbers, but it's not quite that straightforward. So we don't want to go down the route of what you're saying, where the strategy is like constantly like evolving and constantly improving and being tested and back tested and revamped and beaten by a different one and moving there. So the current one is martingale is it's a gambling technique of upping the volume of the if you're talking about gambling, the bet to offset the loss of the last one. Now it if you look into martingale, you'll find out that it doesn't work. So if you have like mainly the big reason is like pick a roulette table. That's basically the reason that the zero is there. So if you have a purely 50-50, then martingale will kind of work, because let's say I bet $1 and it goes against me, then I bet $2. If I win, then I've offset my loss, right? And you would just continue doing that. And the two problems is getting a 50-50 scenario, hence the zero there going against you, making it not 50-50. And the other thing is that it scales very quickly because you've got to offset your previous one. And this is where leverage comes in. So leverage can allow you to fix a lot of that problem. And with the markets, because they bounce around so much, your likelihood of actually getting a win is very high. So the bots that we do, they have a potential for 20 steps, and that basically equates to 20x leverage. And now everyone's going to be like, oh, holy shit, like that's dodgy. But it's not using 20x leverage so that we can make a massive play. It's using 20x leverage so we can start small and keep scaling and keep scaling and keep scaling until all we need is the slightest bounce. So let's say we go short on AVAX, and it's just like pumping and pumping and pumping. Because we're upping the volume of every transaction, it's all it needs is a slight correction. It could pump like 30% and then it corrects 3 and we come out profitable at the end. So it's not super complex. It doesn't require, even if it gets it wrong, it will get it right within 20 steps. Almost, I mean, it's not lost yet. So it's and it's not something, again, that it doesn't need to read candles. It doesn't need to like constantly be evolved. It's not AI learning. It's actually nice and straightforward. So it's a great strategy for us.
Gotcha. That's an interesting one, and I understand the whole lever. I think we have a lot of people in here that trade much higher leverage than most, so I wouldn't worry too much about the 20x. I guess is more what I'm getting at. I don't think that's gonna scare everybody away. But I will. I see Pi in the audience. I know he's like doing like 200x leverage or something on Mexi, but I know
Nice.
that with all that, obviously the strategy still does play a role. So do you guys have because the strategy that I'm hearing is more revolved around the fact that you're trying to cut losses 50-50. So how does the bot actually operate? Does it play off of, like 1% gains, or is it or where are you guys at with that? Because if there's a huge crash, right, that leverage can bite you in the butt. So is there anything that you guys are doing to mitigate that risk or to stop bots, after, any kind of drop below or above, or I'd say, pump or dump, above a certain percentage or that kind of thing? Because when you're playing with leverage, that's also always a risk, right? That that leverage
Yeah.
can get liquidated very quickly.
Yeah, so they're mitigated by they actually hedge by going long and short positions simultaneously. So it's I think the max possible loss would be actually 50% rather than 100%.
Okay.
Just I think for reference, just the way the conversation is going, it's going to sound like we're developing these, which is not the case. These you can get these bots yourself. Just I just felt like it might have sounded like we were doing it.
Gotcha. No, I understand. I follow now.
But I understand obviously the strategy. We've looked, we check these things. But so I'm more than happy to keep discussing it. But just I
Yeah.
didn't want people going like, hang on, that sounds like X bots, and then it's like,
Yeah.
it is those bots, and that kind of way.
Gotcha. So with what you guys are doing, what is the complication that you guys are solving? Because obviously somebody could purchase a bot. Is it making it simpler for people to utilize these bots without a massive fee? Is it what is the route that you guys are taking, or just the management in general that you guys are allowing people to benefit from these bots without having to put a single second of their day into it? Is that more what you guys are?
Yeah. So
Okay.
definitely, yeah. No, I've kind of I've missed the point here a little bit with where I've gone. So we the thing that's very different from us is how you invest in us, all right, and what we do with the price action of our tokens. So the liquidity pool is a huge disconnect between like a project that's creating a safe quality investment vehicle. A liquidity pool makes no sense because it's too easily affected by outside sources, and it means that your way to get in and you get access to what you're looking for, which is the revenue share, puts you at risk. So it just like defeats the whole purpose, because as we like all know, like the high APY projects were a fabulous example, because it's like, okay, I'm putting in $100 to get access to this 80,000% APY. Now obviously because it's in the form of tokens, it's always going to be pretty bad, but even if it wasn't, you still had to, if the price tanks, then your initial is just going to take on such a heavy loss that the APY will, I think we found out, never recover it, if not just take forever. So it makes no sense. It's such a contradiction. Whereas if we do that in-house, if we do it with us, you trade to and from us, we can do way more to stabilize that. And in fact, what we do is we say, your investment with us, your initial investment, you pay a 15% fee on that, and we can talk about why that is. But that's a buy fee. There's no sell fee, so you can think 15% round trip fee. The only time that you'll lose any more than that is if USDC depegs or we have a smart contract exploit. So, that's relatively unlikely. We can say USDC depegging is like pretty much as unlikely as you get in crypto. It's like a nice base layer, right? Smart contract exploit wise is very low risk wise, because we're audited for one. But not even that. The main thing is just that our smart contracts are ridiculously simple. Like particularly the one that holds the funds, it's just such a simple contract, because our price equation is the total value in that contract divided by the total number of tokens. And you mint a token when you buy, and you burn a token when you sell. So it's just a mathematical kind of certainty. Unless the asset that we're using to support the price depreciates, USDC, or is removed, smart contract exploit, then the price won't deteriorate. And we've seen this model slightly, and this is basically what I would have worked on originally, except for the fact that the backing was actually and generally is used as the treasury as well. So you have like direct treasury exposure, as in you deposit money and then that is the treasury, which is grand. But again, then you are literally just trusting them to make money with your money, which is fine. But what we do is our treasury is a separate entity, like 100% separate. So we don't trade with your money. Everything that we're doing is with your money, is with our money, with the treasury. So you're always better off really to go through us into these things, because you go into them risk free. If we avoid the treasury in a single transaction, all of your money is still instantly accessible and the price won't depreciate at all, and everyone can leave at the same price. So these like trading bots, like even if we were here and we were like, yeah, we just went 125x long on Bitcoin, it doesn't matter for our investors, except they won't, make any more money, but they'll still be able to withdraw. And this is what we do: is we put, all you need to check with us is, when you're doing your due diligence, really, is just, do I trust them to make me money? Not, do I trust them to, not turn out to be like a thief in the case of like Shifu, and, cause the whole liquidity pool to go down? Do I, I have to trust them with my money, with my initial, and with my future returns. And I need to look into so many different aspects to try and figure out. I need to do technical analysis on the chart. I need to go to see the sentiment in Discord. I need to go and see how the treasury is performing. With us, the only metric that's important is our treasury performance. That's all that matters. If we're making money with the treasury, you're making money. If we're losing money with the treasury, you're not losing money. You're just not going to make much either. So that's really the thing that we're changing.
Gotcha. And so what I'm hearing is that 85% of every dollar that goes in, I assume that your token is going to be held at about, is there a price that you have on your token?
Yeah, it's currently $1.03.
Okay, 1.03. So 85%, if I was to, let's just say it was 1, just for simple maths, right? 15% of that would be taxed. That's where the team makes some revenue, correct? And that's the benefit that because obviously in any business there has to be some kind of trade of funds. And yes, you guys are doing, you guys are trying to mitigate a lot of that risk by keeping 85% straight into the, straight in that LP. But 15% goes to the team, and I assume some of it from your pockets is going into the treasury, like you said, and then that's generating some revenue. So the max that you are supposed to be able to lose is 15%. Let's say you guys lost everything and you just bought in, you would lose that 15% by tax, but then you could sell because the LP isn't changing at all. Is that correct?
The last bit is the rest, not so much. So the 15% doesn't go to us. 5% goes to boosting the price for everyone. 10% goes to the treasury. Now, yeah, we obviously get paid. The way that it works with us is because of the financial situation we're in, which we're happy with, but the last thing we want to be doing is taking wages out. So we have a pot within the treasury, which is not included in the treasury value. It's just separate. So if you look and you see that our treasury, it's currently about 107,000. That's the trading treasury. We have a pot on top of that, which takes a 20% performance fee. So 20% of profit that we generate. If we don't generate profit, it takes nothing. And that's used for every protocol expense. So except, well, not even that. So that pot doesn't get spent. It gets invested, and the revenue from the pot is then used for expenses, be it marketing, be it pay. So we never take any, capital from the project other than the profit from this pot, which is fed from 20% performance fee.
Gotcha.
Does that make sense?
Gotcha. Yes. So 10% goes into the pot, correct? 10% goes into treasury.
10% goes to the treasury again. We don't take anyone's money. We take profit from the treasury.
Yes, sorry, that's what I meant to say.
This whole project's performance based.
Yeah, for sure. So 10% goes to treasury, 20% of profits go to your pot, which are reinvested, and then profits from that go to pay team and other expenses. Gotcha.
Yeah, exactly.
Okay, very interesting. You guys got multiple layers that kind of stack on top of one another. With that, we got a question in here real quick. So I know Pi was a little bit curious about something that was written in the white paper. So he said that in the white paper it says, through our brand new lending mechanism utilized in the hyperdrive, Treasury will be receiving a moon bag of almost every startup protocol. What do you guys mean by that statement?
Yeah, so that's something that we've been developing for a little while, but is not applicable to the market. So we basically looked at seed round investments and basically trying to automate it. So how can we mitigate enough risk where we can lend money to projects that are starting, and you basically just collect small parts of their token in return? So that it would be great if we were back in like the bull run days where there was like so many projects starting, because the way we were looking at it is catching the sphere or the Titano in like 1,000 projects would offset the way that we risk manage the rest. So you'd be like, even if one like rugged, well, even if a lot of them rugged, we kind of work it so we have very little exposure. But at the same time, enough exposure where if we catch like a 1000x, we still make a lot of money. All of the smart contracts behind how that functions are fully developed, but it would just be really stupid to launch it now and just have probably not many projects use it, and B, we'd have the treasury would have to fund it, which instead, and so that would be money that's going out, or either just sitting or being lent, when the better choice for our investors is for us to invest in and give them the profit from that. Not off the table at all, but yeah, not something that we're doing. So you'll find that in a slightly separate category to the overall mechanics of what we're doing now currently in the white paper.
Gotcha. That's very, very interesting, actually. Is there a way that you guys would be getting those? Because obviously, with projects that are going to do fairly well, generally they have their whitelist, right? Is there any way that you guys are doing that, or would that just be like manually going out and reaching out to these projects for that?
So if that was to launch, it would be automated that they would be able to come to us and basically they're borrowing money kind of collateralized by what will be their own token. Well, we collateralize it with stables and then with their own token, and we change the lending mechanism, so we're lending them a token that will only be spendable with project related expenses. So we're not loaning them out like USDC or something. We're loaning them out a token that Certic accept, Obsidian accept, so you can go and get audits and again, development related expenses rather than team pay or something like that, because obviously and this is protect against rogues as well, because
yes,
they're getting out actually a worthless token except for with legitimate providers. So that's kind of how it would work. And we would like love to be able to launch it, but like we're saying, it's just not kind of the time. But that's obviously something that we hear teams say a lot when they're like trying to get out of something. But we do have the contracts developed; it's all done. We paid our developer quite a lot of money to do that. We're still very very intent on doing that. It's just not the right time.
Gotcha. Yeah, that's very exciting stuff. Very cool. So a couple more. So right now you talk about going into I'm sorry. I lost track. What's it at? Here we go. So, what security measures have you guys taken to strengthen the protocol as everything is vulnerable? So, I know you mentioned the simplicity of the contract itself, but is there anything else? Because as you start to develop these other contracts that are building on top of that, there might be some vulnerabilities. Are you guys doing anything aside from just audits to mitigate that risk?
I mean, one thing which is probably kind of underrated is just how heavily we test them. I know that everyone's thinking like, well, it's pretty good, to be fair, and it, yeah, I know you kind of mentioned it, but really it is just the simplicity. It's like our contracts are not this big, massive jumble, that is exploitable. Realistically, they're very, very straightforward, and that fundamentally makes them very, very hard, because there is no real way to be removing the backing, because you just have to provide the HFI token.
Yeah.
And then there's this is the beauty to the blockchain, is there's no way to trick it that you're giving it the HFI token, because it's so tangible to the contract what it's receiving. So if we start to get way more value in there, like one thing is that the treasury is greater than the pool value by about $45,000 or so. So currently we could, like, if that would obviously be terrible if that $63,000 or $67,000 was hacked and removed, we could still pay everyone back. Like, it would be the death of the project, but we would still be able to pay everyone that's currently in it back, plus a bit of extra. So if the value in there, explodes, and suddenly we're thinking, okay, the treasury can't pay everyone back if we have a worst case scenario, then definitely we can go and get a few more audits as well, but and hackathons and stuff. But otherwise, it's pretty secure in the grand scheme of contract.
For sure. I like it. And last couple bits before I bring on I know Hanji was talking about coming up. Before we bring him up, couple questions right now. Why did you choose to launch on AVAX? And does the token act as a stable coin in any way? Is there any LMS attached to it, or is it just free flowing with the market?
So AVAX, it looked a little better to launch back when we launched it. I think it was April or so, maybe a little bit before that.
Everything looked better to launch then.
yeah, exactly. Yeah. I mean, it's solid. It has a good user base. It's lightning fast. It serves every purpose. And our treasury, is on. We have funds on Polygon, Binance, and Avalanche currently. Those are we're not on ETH, but yeah, our treasury split up and it invests everywhere, so it can just follow around wherever we think there's money to be made. So it doesn't matter too much. And we have a few ideas on how we can kind of bring our product cross chain, but cross chain as well is maybe a little bit overrated. Like the blockchains used to be, like kind of like an island. As now you can just bridge back and forth. It's not much of a barrier to entry in the grand scheme of things. So no LMS, we don't need that. And equally, it's not free flowing with the market because it's all just done in house. So our price it's not going to depreciate. It hasn't depreciated. Obviously, we don't, it technically could, but again, we're looking at probabilities that in the crypto sense are very, very, very low. And it's, obviously, I don't want to even correlate it to stable coins, because the second you start saying that, then everyone wants to know, well, how is it holding peg? As it's like that. No, that's not the point. We're not pegged to anything. We're just backed. Like it's a token, and these are things you don't really have these in crypto very often, that has an intrinsic value. So each HFI token has 1.03 USDC supporting it, readily redeemable 100% of the time, verifiably on chain. It's just so simple.
Gotcha. And as that treasury increases, will that LP increase as well? It would, correct?
Yeah. So the treasury, you by buying into our token, you just have upside exposure to the treasury. So what we do every month is we type up an investment report on our website, and we figure out all of the numbers, and we dump then a big portion of those returns basically after the 20. So we take 20% performance fee. Some is reinvested in the treasury. And then some goes back into the pool, which offsets the price, and it's just, that's how the price will just continually appreciate. And we kind of do that a little bit by eye, so to speak, because we don't want to fix ratios there, because we need to be able to react to, like, if a load of people buy in, well, then maybe we need to reinvest a little bit more to make sure the treasury keeps up. Like, it's very powerful, because what we've done over the last 3 months is a 3% return per month in the treasury on average. And that's more than a 3% return in the pool, because it's a lower value. So the more money in the treasury versus less money in the pool means that the treasury becomes really, really, really powerful. So if everyone's sold out of the project and you were like the only person left, that would be like an amazingly good scenario for you, because now you have $107,000 treasury working just for you. Yeah, it's like every time someone leaves, the people who are in should be pretty happy about it. Equally, then you're thinking, okay, well, hang on. So now that these guys are doing AMAs, everyone's going to come in and I'm going to get reduced rewards. So we have ways to mitigate that, which is basically you can lock up your tokens for 3, 6, or 12 months. And then what we do is we trade actually with your money as well. So you get additional rewards for doing so. You also get access to increased risk as well. So this is not something that's for everyone, but if you're looking for more money out of the project, well, instead of just having exposure to the treasury, you might as well have exposure to us making money with your money as well. And while there is obviously the risk that we void all that by accident, or we make a bad investment, equally we obviously make a very strong effort to ensure that those people don't lose money, because that would again be tricky. It's going to hinder our adoption. So
Mhm.
there's definitely risk there, and that we really don't want to try and hide that from people, because if you don't want risk, just buy the token and do nothing. Locking is just for people who want more
Yeah.
rewards. And so that also helps us to stay efficient, because it's taking from the pool and putting in the treasury. It obviously then goes back to the pool, but again, the treasury's got made money as well. So we have kind of ways of fixing any offset that we get.
Yeah, I think that's really awesome. And back to the point that you'd made a little bit ago, I think the whole AVAX chain thing, the only downside to, like there's not really nearly as much, as bridges have become far more popular. We have some solutions that are coming that are gonna kind of tear down some of the bridges that are out right now. But I think some of the risk is just if the network doesn't succeed like you would expect it to, right? Then you have some of those assets that are paired to. Granted, you guys have USDC, so it's a little bit less risk on your part. But if any of the LP is held, in the actual native asset, that's when you would have, some issues. But as long as it's not, there's a little bit less risk. But there are
We
solutions.
can't hold in natives, though, or else we would lose value,
Yeah.
when they go down. So yeah, there's
Exactly.
no issue there.
Exactly. Is there any plan to ever hold in natives, depending on the market conditions?
Not in the pool. So the pool, that's our thing is, like, it's never going to really deteriorate or depreciate. Will we invest in L1s? Yes, at some stage. In the near future, almost definitely not. But because just if we get into a giant bull cycle, yeah, the treasury will 100% be buying these. But the pool will never leave from USDC or USD Plus, those two stable coins. That is, and USD Plus is basically USDC, because it's always redeemable 1-to-1, and we interact directly with the contract. So it's basically USDC for us, but it pays yield. So that's the other thing, is the pool's growing at about 9% annually on its own, without the treasury doing anything. So
You guys
that's
are
your yeah. Go ahead.
you guys are stacking this 9% on another 9% a month, or whatever it was that you'd stated. That's funny.
Yeah, so like realistically, outside of a black swan event, your worst case scenario is 9% annually, which is not a bad worst case scenario.
Depending on how USD Plus does, yeah, 100%. It's
That's
very interesting.
what it's been doing so far.
All right, so we got a question. I'm gonna bring Angie up. Let's see. Go. If you want to come up and ask the question. Sorry it took so long to get over to bringing you up here, but feel free. Perfect.
Yeah, can you guys hear me?
Yes.
Um, I know you've asked about security, but also talking about security, I want to confirm, as hybrid finance, has it been audited?
Yep. Yeah, we've been audited by CoinScope.
Okay. Then also, what are the mechanism in place? Because you were only talking about the smart contracts. You also make use of your bots, and we know bots sometimes can malfunction, and also they can be hacked and stuff like that. What are in place to ensure stuff like that don't happen? And even if they happen, what are in place to mitigate the loss to users?
Yeah, so users would have no loss, because the treasury is a separate entity to the pool. So and any treasury downside is contained 100% within the treasury. So it's the only thing is you don't make money, but you don't lose any either.
Okay. Then about the treasury, who manage the treasury? Is there a DAO or is managed by the team?
Currently managed by the team. We won't become a DAO either, but our plan is to have token lockers to have an element of control over the treasury, not complete control, but voting power for one, and also we will be opening custom locking periods based off a singular investment. So a lot of seed round investment would have a linear vesting cycle between 12 and 24 months. So we can open custom locking periods for individual deployments. Obviously, by doing that, you would take on the risk, or well, you could choose the element of risk that you take on by going into one of those investments. and that would again be decided by people who have locked their tokens either in that particular window or in a window in general. So an element of because you're investing more in the project, in a sense, you're taking on more risk, so you're getting more potential rewards. But also, we want you to be able to have a say, because it's only fair, right? If you're taking on slightly greater, let's say much greater risk, actually, and you're investing more, you deserve more rewards and more power.
My last question. What are the next big updates in the pipeline? Like, what should we be expecting?
Our kind of focus at the moment is just continuing with what we've been doing. So in terms of financially 3% per month, roughly, in the treasury, we would like to expand upon that. I think there's a lot of scope for us to grow on top of that. I think we will be doing pretty well this month, and we would like to see that figure get higher and higher. And we want to start to see higher adoption. We obviously believe in what we're building, and while we don't financially depend on new investors, it's very important to the team and to myself, that we believe that we've created a good product, and we want to see people use it and to make money with it. So we want to, get after making that money for people, for our current investors, and B, getting new people in so that they can also benefit from it.
All right, thanks. That was all for now.
Thank you.
Awesome. All right. Got one more question. I know if you want to hop up here, we can pull you up. I hope that was intentional. You raising your hand was intentional. It's been a while since. Let's see, if he doesn't hop up, that's totally fine. Okay, there we go. There we go. Perfect. Hello?
Yes,
Yes.
okay. Thank you for this opportunity. My question is, I saw that on your white paper that you'll be having a lottery, development of staking and lottery. I want to ask, this lottery, like, how many NFT or tokens do I need? I mean, sorry, I'm trying to get the question. Sorry. Just give me a minute. Sorry.
Oh no,
No
no
worries.
worries. I think I kind of understand what you're saying. Well, that's part of destinations. That is something we also have all coded and ready to launch, but due to kind of market conditions, we decided to kind of wait a little bit. It's more of like it's a travel lottery, pretty much. But we kind of need I think, a better market for that. It's more of a fun thing that we hope to build into something bigger eventually. But it's not something we're going to launch. Probably not until maybe next year. Once we start to get the market starts to look a little better, especially for NFTs like these, then we would probably launch. We're kind of going to stick with the finance part of hybrid finance.
Okay. Sorry, I couldn't construct the question properly. I was trying to, look for a way to construct the question. And also, will you be involving influencers in your marketing?
For now, not many. It just depends. But we'll kind of see with that. For now, we're kind of trying to. Well, we're here at Cardinal House, but like kind of going all out with influencers and things like that. We're kind of trying to kind of grow slowly, like organically. We don't need to go all out and just start getting videos out there, kind of like that. So no, not too many. There's a couple. There are a couple of influencers that we have been working with, but not too many.
Awesome.
Okay. Thank you. Thank you,
Yeah,
Chris.
No worries.
Yeah, thanks for coming up.
Mm.
I'm going to pull our next. Got one more, I think. I think this might be the last one. If you guys do have any other questions, make sure you type them up in name and questions, and I can ask them at the very end. If not, this will be the last community question we got.
Hi
How's
everyone,
it-
can you hear me?
Yes.
Fantastic. All right, good to talk to you all. So, just so everybody in the audience knows, I actually know the hybrid finance team from back in the day when they launched originally. I came over to find out about this new iteration, shall we say, of hybrid finance. And with regards to influencers, I remember when they launched previously, they were working with quite a few. And we went from like an AMA when I first kind of found out about this project with 3 people to one with like thousands of people in it. And it was crazy. So they can smash marketing. I've been there, I've seen them doing it. They're amazing at it. When they're kind of putting their pedal to the metal, the marketing is amazing. So I know they can do that. I think with them wanting to grow slowly, I would massively trust them because I've been with them from the start, and I'm sure they have a very good reason for that. But in terms of my own questions, I was wondering a couple of things. The first was about debank integration and roughly when that was going to be organized, or if it's on the agenda, because it's just a nice way to be able to see everything all in one place for me. Second was, have you thought at all about offering kind of guidance on how to do documents around trading bots? Because I think there are a lot of people interested in this, but they don't understand how complicated it is to actually set up. So if you kind of position yourself as a bit of thought leader, then it builds that kind of soft power and your authority in this area, then sure, some people will come and they'll be like, okay, great, and they just use the information to set up their own trading bot accounts. They're never going to be your customers anyway. They're going to get that information from somewhere. But the people that come, they find this information intimidating and they're like, wow, I don't want all that hassle of handling the trading bots. They'll probably go and invest with you. The third thing would be real world assets. Is that something that's on the table at some point in the future? And the fourth and final one is 20% as a performance fee makes sense with this level of the treasury. But as the treasury grows, what are your thoughts on a sliding scale? And I'm happy to repeat them because I know it's 4 questions in a row.
Yeah, I was just gonna say.
Yes.
3 minutes later.
You're always really complimentary, and then you just hammer us with questions.
That's essentially my job, right?
Yeah, no,
Yes.
for sure.
We love that.
We do. Okay, well, I'm gonna start at the end because those are the ones I can remember, and I'll work my way forwards again. Real world assets is 100% on the table. Not imminently, but yeah, definitely, it's something we would like to branch into with the treasury, as quickly as is practical. So we're not like hammering away to get there, but yeah, it would be cool to it would be great to get to that sort of stage. And it would we would really like to get this as well, not regulated is not the right word, but we would like to get registered, and that'll give us access to additional financial products to invest through. There's a lot in crypto, and there's more coming out, and there's ones that we want to bring out as well, but you're never going to get the same depth of options that you'll get in TradFi as well. So that would be a really nice combination of our knowledge of DeFi, and finger on the pulse, so to speak, but equally going into potentially more quantifiable, more predictable assets in the real world would be great. Sliding scale for the performance fee, yes. We're really, the goal we have with the operations pot that we have, so we're talking about we're investing this to generate income, is just to get the kind of all of the expenses paid, and then we want to try and get ourselves into the project full time, one at a time. Definitely, once we get to that stage that the operations pot is generating the wage required to get 3 of us into this full time, then all we're looking for is protocol related expenses, which are not going to be astronomical, particularly not in the grand scheme if the treasury is doing very, very well. So we have really no interest in kind of taking out more than is necessary. And so you definitely, if we like, I mean, if we're in a surplus, that's an amazing place to be, and definitely, because the thing we have our eye on with marketing, and this is why we're not going down the influencer route, is that the bang for your buck with influencers is not great. It's particularly poor at the moment. So what we're really targeting is just going around to projects, places like Cardinal House that have active investors, not just active people on Discord, which is what most of the alpha groups are these days. We want to find people with actual money that actually want to invest in our product because it's the right product for them. Because you're saying, whenever you have a liquidity pool, you need people to keep buying in. You need like a ton of money in the treasury to do buybacks, but buybacks are pretty terrible because it's just exit liquidity or it's just extra returns for someone. So we don't financially need new investors. It's not even massively beneficial to the project. But like we were saying, we want to see it adopted. The metric of success is the treasury performance. So that's not really, like, I know because everyone's like freaking out, like marketing, why, like we should have like thousands of people all chatting in general. It's like, no, we don't need that. The best marketing we'll ever get is making people money. No one's quiet when they make money, particularly not in DeFi. Like the second anyone makes money, we're always telling everyone else. So that's probably the best thing, because then they're going to tell people what exactly it is, and we're going to get the right kind of investor, which is very important. You can have to remind me of the other questions. Sorry.
Sure. So the first was maybe an easy one. T-Bank integration. I don't know if it's on the agenda at all.
It is, yeah. That should have happened earlier, but I didn't realize you've got to have $1,000 in your wallet, which we will sort out and get done pretty soon.
Okay, it's not important. Then the other thing was, like, have you thought about offering guidance on how to do documents for the trading blocks and things like that?
Yeah, we haven't, to be fair. It sounds quite interesting. Something that we want to do is, like, we have our investment reports that come out each month on our website, and they go through all of our investments, all the money that we've made, where it's come from, all of that. And we want to branch that out and do just blogs there as well. I don't know if anyone's familiar with Freeway, but they do they do brilliant like market analysis that they publish each month, I think. That's awesome. Like it's great. So we would like to be doing things like this, and definitely that is something that would fit into that. So I think it's not something we have thought of, but something we definitely will consider.
Yeah, that's exactly the kind of thing I mean. You position yourself as a thought leader, and then people come to you because you're respected, you're in the community, and known to be the people that know how to do this really well. Cool. Then, yeah, I guess the final thing would be, again, to say thanks. I mean, you guys, you've been plugging away for months and months and months now, and good for you. Thank you, and sure, from my perspective, I know you guys are going to make me money, so I'm looking forward to it.
Cheers. Are you traveling at the moment?
I actually just got back to New York, but so I left Asia a couple of weeks ago. So. Good
trip.
Yeah, fantastic, man, absolutely fantastic. But we'll chat when there aren't 18 people listening. Everybody wants to hear about my time in Thailand.
Well, awesome. All right.
Thanks
guys.
Yeah, thanks for coming on, Ajax. All right, so I think that's it for all the questions that we've had asked. Let me double check the AMA questions, but so far, really, really appreciate you guys for coming on and going through everything. It is awesome to hear about some of the stuff you guys are doing. I know Pi asked about DAG, which is an interesting one. DAG is very, very interesting, I think, to all of us right now. But yeah, I think that's all the questions that we had. Thank you guys for coming on. I really do appreciate having good conversations for the last hour 10. But yeah, let us know if there's anything else we can do for you, and hopefully you guys have a wonderful day.
Yeah, we appreciate you having us. We'll be around. I'll keep an eye. I'll go back through the AMA questions, and just if we didn't get to anything, I'll answer it there. So
yes, and then
equally you can head to our Discord or ping us or whatever need be.
Yes, we had $50 going to the best question. That includes the live ones, and you guys can think on that for a second, but if you wouldn't mind taking a look when you do look through all those AMA questions, let us know what you thought was the best question, whether it be one of the live ones or afterwards, because there was a $50 giveaway to the best question for today. Just you guys are awesome for hopping in here and hanging out for the past hour, and I do really appreciate it. And having, like I said, having these really good talks during the bear market, I think are really important. Keep their morale up for people a little bit. And I'm excited to see what you guys end up doing over at Hybrid. Also, would you mind dropping a link to your guys' Discord server or whatever socials you guys have in the AMA questions? That would be awesome.
Yep, I've got it here. This is all.
I got it. Haha. I won this
Did you?
time.
Ah, man.
Oh, so
Nah, I'm just behind.
perfect.
Heartbreaking.
I'll delete my. Oh, okay.
At least close your embeds. Be professional.
Perfect. Awesome. But yeah, so let us know what you guys thought about the best question. If you guys have one in mind, go ahead and let us know right now. But I also understand if you want to go back and look through any of the ones that were typed out.
Yeah, I'll go through and I'll drop you a DM.
Awesome. Thank you guys so much.
Convenient. Yeah.
Yeah, that's perfect. Anyways, have a wonderful rest of your day, guys. We will catch you soon.
All right,
Cheers.
you too.
Thank you.
Have a wonderful day.